Hey everybody, it's Norris from the Norris Group. It is Friday, June 23rd, and who is going to be delivering your groceries? Or are you going to still stay at the local grocery market? That and much more as we cover the biggest headlines in real estate. You won't want to miss the radio show and podcast this week. We continue our journey updating our California-only investor series. This month, all summer, actually, we're going to be working on the buying systems. We're going chapter by chapter, talking about the different buying strategy, but more specifically, how where we're at in the market affects that strategy, looking over the last cycle and the last 10 years, talk with experts in the field, and talk about how it changes over time and depending on where we're at in the California market. This week, we're covering expired listings with Chris and Molly Silva. Once again, their family comes from a long line of REO specialists. They've been in REO short sales. They're also investors, so they bring a wealth of knowledge, and looking forward to another great interview with them. Mortgage credit risk increased in the first quarter by 3.6 points to 105.6 according to CoreLogic. The latest home sales and price report from the California Association of Realtors shows existing home sales increased 5.4% month over month and 2.6% year over year. Summer is getting hot. Freddie Mac reported mortgage rates remained relatively the same, with 30-year rates at 3.9% and 15-year rates at 3.17%. A recent report from Go Banking Rates shows the cities with the biggest cost of living increases. Factors in the study include the cost of living index, which covers food, rent, utilities, transportation, and which cities saw the biggest increase in the amount of income needed to live comfortably in those cities. Los Angeles was surprisingly the only California city that made the top 10. It landed in the number 6 spot. Top 3 were Nashville, Tennessee, Seattle, Washington, and Louisville, Kentucky. Well, that's no fun, so Go Banking Rates also released a list about cities where prices were actually decreasing. Sugar Land, Texas, Miami, Florida, McAllen, Texas, Houston, Texas, and Anchorage, Alaska all had dips in pricing, which is a little strange. What's going on in Texas? The May Zillow real estate market report shows homes for sales are not only decreasing, but the decline in listings is happening at the fastest rate since 2013. The amount of homes available for sale in the market is 9% less than last year, primarily due to more single-family rentals becoming available. Negative or little equity in the hardest hit areas is also keeping some houses off the for-sale market. However, we should point out that some experts are talking about seniors having to age in place because of income or because prices have increased too quickly for them to downsize and make sense of that move. And then you've also got home ownership going down and people going into houses, according to the California Association of Realtors. They're going in thinking they're going to live in these houses a lot longer than has typically been the case. So maybe you've got people aging in place and staying in place a lot longer. Nobody's giving up their properties and the move-up market is stale. I don't know. We'll have to wait and see what happens. Congrats to Zillow CEO Spencer Rascoff and Fannie Mae CEO Tim Mayopoulos for being named the Glassdoor 2017 highest-rated CEOs, one of their top 10 lists. The award is based on employee feedback by way of anonymous company review that captures their overall job and company satisfaction, insights into the reasons they work there and what needs improvement. Exceptional work-life balance was one of the most important reasons why they work there. Both of these companies are going to be represented on I Survive Real Estate, so that's pretty good. Fannie Mae just released their economic housing outlook report for the month of June, and as expected, according to Doug Duncan at I Survive Real Estate last year, they're expecting 2% growth rate for 2017. Chief economist Doug Duncan says that this is the 8th anniversary of U.S. economic expansion, now the 3rd longest run since World War II. He goes on to say labor shortages is one of the reasons that the building industry hasn't quite taken off. If you've been rehabbing houses, I don't know if you've had the same experience. It is really hard to find some of those specialized labor skills like laying tile. It's been a little bit difficult and it's getting more expensive, so I would have to agree. So Amazon has acquired Whole Foods. Holy cow, can we say disruption? The reason this makes Federal Reserve Bank of Chicago President Charles Evans less confident is raising interest rates usually coincides with companies being able to charge more for their product or services. This acquisition seems counterintuitive to that logic, so it makes him less confident that inflation will hit that 2% target. Uh-oh, a little battle between Federal Reserve and Fannie Mae. We'll see. Evans is a voter on the Federal Open Market Committee that just raised interest rates last week. So there's a serious battle going on between Walmart, who purchased Jet.com last year for just a cool $3 billion, and now Amazon and the Whole Foods combo. Whole Foods got over 400 physical store locations in some of the hottest markets across the United States. Amazon just basically blew up their distribution system. It'll be really interesting to see how having access to all those physical location changes their business model. So, question for you is, who is going to get your grocery dollar? A, local grocery stores, B, Amazon and Whole Foods, or C, Walmart and Jet.com. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. Hopefully we'll catch you at one of our upcoming events. July 11th, we'll be in Los Angeles doing an intimate evening with Bruce Norris. Despite sounding racy, it's actually just a one-on-one interview with Steve Love at Prosperity Through Real Estate. August 16th, 10 life-changing days of real estate investors at Invest Club out in Orange County. September 14th, the same talk, but we'll be in San Jose. We're up at the San Jose Real Estate Investors Association. September 16th, mark your calendars. It's the one day that we have scheduled, a full one-day training, Cashing In on a Boom up in San Jose. It's going to be on a Saturday. So we missed you in Northern California last year, so we're back this year giving it a shot in San Jose. And of course, mark your calendars, September 22nd, I Survived Real Estate 2017. It's our 10th year. We officially launch next week. We'll have more information. Together, we've raised over $700,000 for charity, and even without officially launching, we're already 85% committed. So if you're interested in attending live, you won't want to miss signing up. For more information on hard money loans, including fix and flip, buy and hold, and new construction, check out thenorrisgroup.com. Or for more information on trust deed investing, check out tngtrustdeeds.com. Watch out for more information about us lending in Florida coming in the near future. With that, have a great weekend, and we'll see you next week.